Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The markets are going to open very soon, and I'm referring to the rupee market actually and the bond markets. We will get pre-opening rates for equities, and so it's important to know what the backdrop is. As far as we are concerned, there is still a little bit of worry on the yuan. It is 6.886. So, okay, that could be a spot of bother for us. And Indonesian rupiah is also opening about 0.17, not opening, it's trading 0.2% lower. Even after yesterday's fall of 0.83%. So what is in store for India now and in the near future? Sajjid Chinoy, Chief Economist at JPMorgan, joins us on the phone line. Good morning, Sajjid. Will Lira's fall be a one-day wonder or maybe 2 days at best? Is it largely domestic or do we have to worry?
Yeah. Morning, Lata. I think Lira's fall depends very much on Turkish policymakers. I think the impact can be quelled relatively quickly if we have a basic set of crisis management tools. The market in Turkey is broken. I think what investors around the world are looking for is just a set of confidence-building measures, and I think this would need to involve some monetary policy action for sure. Inflation is running at 20% and real rates are negative. So investors want to see that the Turkish central bank is prepared to raise interest rates. This will, while fiscal policy was not part of the problem, it will need to be part of the solution, and they'll have to double down on ensuring the fiscal stays on track. And I think there needs to be some broader environment for deleveraging here, by which I mean the gross financing requirements of Turkey over the next year are $240 billion. And their reserves are just $80 billion. So Turkish investors want to see how will Turkey manage this repayment schedule. If you get a sensible set of confidence-building measures, I think we've seen yesterday that the lira can bounce back quite quickly. But yesterday what you got was technical issues. We don't need technical measures. Investors are looking for a broader economic policy mix that will address some of these underlying imbalances.
Sure. Sajjid, hi, morning. So if the impact is not quelled, what do you reckon the way forward could be? Are we looking at a new global financial crisis, or do you think that even if the impact is not quelled, things would only be restricted to Turkey and the surrounding areas?
No, I don't think we're looking at a global financial crisis. I think Turkey is just not big enough to do that. What you will see is some direct contagion impact, because BI's data reveals that there are about $200 billion of creditor, borrowing by Turkish banks to continental Europe and the Gulf, and there are an unknown amount of derivatives. So there will be some direct spillover in the coming days. But again, that presumes that the Turkish authorities will not backstop the stresses in the banking system, and the hope is they will backstop those stresses. So I think for now, this is more of a sentiment-driven contagion, which can therefore be reversed very quickly. But for emerging markets, this is not a good environment. The dollar is strengthening. The CNY for the last 4 weeks has been weakening. And now emerging market current account deficit countries like Brazil, like South Africa, like India are also deemed to be in the same asset class as Turkey, and therefore we get impacted every time there is stress in Turkey. So not a good environment for emerging markets. All I'll say is that this does not require very much to reverse if Turkish policymakers can just undertake basic steps to try and revive some confidence.
Okay, but Sajjid, the dollar strength over 96, the DXY, was because the euro fell, and the euro fell because of the exposure to Turkish banks. Now, that's done and dusted, 200 billion, and you know the extent of the problem. Do you expect continued dollar strength? Therefore, I mean, is 70 in India going to become 70, 50 or 71?
Lata, what we've seen is the dollar has been strengthening well before Turkey's problem started because of this desynchronization of U.S. growth. U.S. growth was 4.1% last quarter. It's tracking 3.5% in this quarter, and Europe is struggling to break 1.5%. So even if the Turkish problems are resolved and you find the U.S. economy is racing on, and investors believe the Fed will be raising rates at least once a quarter, but Europe stumbles further because of Turkish problems, that will cause some dollar strength irrespective of what happens in Turkey. Now, as regards the rupee, I think I keep saying we need to step back here and not focus on bilateral dollar-rupee levels. I think central banks look at trade-weighted levels. The fact is we will have to move in tandem with other emerging markets, as we found out yesterday. In trade-weighted real terms, the rupee appreciated 20% for 4 years. In the last 6 months, it's only given up 6% of that. So even if we get some trade-weighted real depreciation, it's not the end of the world. In fact, it may be desirable for the economy. But at a minimum, the rupee will have to move with its trading partners. So if the dollar were to appreciate and our trading partners were to weaken, the rupee will have to keep in touch. I think we should not focus on absolute numbers like 70. I think they're meaningless at some level.
Sajjid, before we let you go, we have to ask you about retail inflation. The fact that it has fallen to 4.17%.
The rupee's opened a little stronger from 69.93 to 85. And the markets also opened stronger, but they've given up. They opened, the Nifty opened a percent and more higher. Now only 0.25%.
Okay, we'll wait for these rates to settle. But in the meantime, Sajjid, do you think this inflation number will give some comfort to the RBI? And could we be in pause mode for the rest of the year?
I think we can certainly be in pause mode in October. The details of the inflation print were even softer than the headline. Core inflation momentum was revised down in June to just 0.2%. August, it fell to 0.1%, which is the lowest momentum in 15 months. So after a string of high core inflation numbers, core inflation has moderated. And secondly, you're seeing food prices remain very muted. Vegetables have again begun to fall in August, and we're not seeing the MSP increase, at least as yet. So I think the internals are quite soft. And unless, the world blows up, I think, this will be enough for the RBI, at least for now, that they won't need to hike rates for the third consecutive time. So barring any unexpected developments, our sense is the Reserve Bank stays on hold at the October review. Okay,
well, actually, at the moment, the bond yields have opened 2 basis points lower. Yesterday's 7.82 has been replaced by a 7.8 in the opening trades. But Sajjid, while you are right in saying that we should be looking at ourselves vis-a-vis the yuan and vis-a-vis other trading partners, the only obvious number that we look at is the dollar rupee. So what's your sense? Is there more weakness in store? The opening rate is just 69.85. A minor, okay, now it's come to 69.78. So this is almost a 0.25% recovery. Yeah. But what is your sense? Are we going north of 70 because of the persistent weakness in yuan, for instance?
So, Lata, I think today, in the last few hours, the world has settled down a little bit. And so there is a bit of a risk-on environment, and that will help the rupee. But if you ask me over the next few weeks, if the dollar were to keep strengthening and the CNY were to, I don't think the CNY will breach 7. I think that's just psychologically too important a number for the PBOC. But if the CNY to head towards that level, by all means, the rupee could weaken further. I keep focusing that there should be no sanctity to any one rupee-dollar threshold. It's kind of meaningless for the economy as a whole. We should focus on the trade-weighted rate. So you can have a situation where the trade-weighted rate is flat, and yet the rupee-dollar rate is weaker and breaches 70.
All right. Sajjid, thanks a lot for taking this call for us. The pre-opening rates are in. Tata Steel, of course, would be our first stock to track. That's up about 3% in pre-open. Let's see how that one shapes out. HDFC Bank yesterday had a bit of a weakness, but normally you buy, there's a tendency to buy into that. So that's opening about 1% higher. And of course, in the broader market, Wakrangi is down another 20%. That, of course, came out with horrendous numbers, and that's having an impact. So that one down.
Even IOC is actually moving up. Jefferies has increased their target price post the numbers to 195 on IOC, and the gross refining margins were also quite good, actually $10.2 a barrel. So IOC looking
Page has become a mid-cap stock. I mean, I would have thought it's a large-cap stock, but that's having this impact of 4% higher on that stock. I don't know if, Anuj, did you read Tata Steel and I missed it? 2.67 now.
2% higher on Tata Steel.
Moving up now to 3%. But these are pre-opening rates.
Whenever I see Page Industries, now it's at 34,000. Whenever you're feeling low in life, about having missed out on a trade or an investment, you should think about those who bought into Page Industries IPO and then on listing day sold at a loss. It listed at a loss to the issue price.
Even Infosys bombed. The Infosys issue devolved in 1991, and Enam had to buy it as, the merchant bankers. Now, look at Enam's luck, having bought the devolved amount. Well, anyway, at this point in time, Page Industries is leading the pack as far as the mid-caps are concerned, at least in the pre-opening rates. Well, I shouldn't be reading Bhushan.
SBI is up 1%. HDFC Bank is up. ITC is up. I think today could be one of those days where at least the opening could be better than what the SGX Nifty thought.
The banks will give at least a token salutation to the lower inflation number, and that's why you are seeing the banks a little better. Even Bank of Baroda, Andhra Bank, SBI are opening higher. Let's see. This is only a token trade. It's not even a trade, it's only a bid. So let's wait and see how things pan out after the markets open. Prakash, any other stocks that came to the mind? What about Repco and DHFL? Did you look at those numbers? Both looked good, DHFL in particular.
Yeah, I mean, the numbers do look good, but, in this environment, some of these housing finance companies might not, give you, and then having seen the kind of run that we've seen last year, some of these companies could probably start seeming disappointing subsequently. I'm not saying there's anything disappointing with the numbers right now, Lata. Some of the auto ancillary numbers that Sonia was also referring to, I mean, you look at some of these smaller companies like Talbros, continues to be on a blockbuster kind of a move. Today we've got Suprajit Engineering. Hopefully they'll also kind of make a comeback. So I think there are these very well-defined pockets where there is space, and if somebody were to take in the larger ones, you have the Motherson Sumi of the world, which also kind of still offer great value at current market price. So I would stick to some older themes, well-known themes, well-discovered kind of themes, not really venture out too much into newer names which still have to carve out some sort of a history of sorts to give that validation.
Apologies, actually, Repco, the numbers were bad. It was DHFL that was good. So, growth was weak, there was higher NPA, there was lower margins. So, Repco was almost on every parameter a disappointment, and it's showing up with a -2%.
But DHFL was pretty good, actually. I mean, the stock as well is now up almost about 1.5%. The NIMs jumped to 3.44%, which was the highest ever for DHFL. By the way, Prakash, I also wanted your thoughts on Jet Airways. I mean, it looks like it's getting from bad to worse for them. Do you think it's just a one-way street on the downside for Jet, or would you look for any kind of contrarian call here?
No, it's difficult to, I used to believe that Jet had all the makings of a turnaround early 2018. It seemed like they were on track to do those things. But given the competitive intensity, crude issues, and their own endemic issues, I think Jet is getting into a issue where, in a situation, Sonia, where they'll keep on having these allegations slapped at them. I mean, today there was some news flow on them talking to private equity investors for 400 million, and they've denied that. They keep on denying, there'll be counter allegations. So I don't think they will bring that confidence back in the investors to buy into this. We've anyways booked our losses out and exited somewhere midway. But I don't think there's any turnaround that's very imminent at this point in time.
Okay, Chennai Petro is down 6.5% in pre-opening. Interesting, but let's see how things shape up. Pre-open has ended actually. 26 points higher is what you have on the Nifty, and 70 points higher is what you have on the Bank Nifty. Ashwini, if the opening is here, what would be a call then?
See, we need to see what happens at yesterday's high 11,420, 425 on Nifty futures, and Bank Nifty futures 27,950. In case we go there and start to collapse again, then there's a short trade. But if the market really picks up steam and market bets, etc., everything works out, then maybe post the first dip you could even buy. But it all depends on what happens post the open.
Okay. Well, just coming back to you for more stock ideas, but let's put the commodity cues as well on the table. Gold at 2018 low, Manisha.
You like that, don't you, Lata? Well, yes, very, very sharp declines onto that one. We are down nearly $150 from where we started the previous quarter on, and it has been a sharp slide in last 1 week itself. I mean, it's not going by textbook at all with so much of geopolitical and financial concerns, the global turmoil that we are seeing. It isn't looking at any safe haven buying, and we have broken below that psychological 1200 mark as well. 1180 is the next level to watch out for. That has held as a support for the longest time. But the point really is that there is no investment buying, ETF buying coming at these levels. The India's physical buying is just about picked up on the lower side as we are getting into the festival season there. But when you look at the hedge funds positions, their net shorts are the highest since 2006. So only thing that you can hope here for is a short squeeze rally. But apart from that, the fundamentals really are on the weaker side at these levels. What has seen strength, though, has been the crude oil prices, up by 0.5%. And this is after the OPEC monthly report that came in yesterday, where it shows that the Saudi Arabia output has declined in the month of July. Remember, Saudi Arabia and OPEC had said that they would increase supplies, and especially to try and meet that gap that Iran perhaps would create into the market. That doesn't really seem to be happening. But on the other side, the non-OPEC supplies are expected to increase in this year and the next. And that is something that's really seems to be putting a lid onto the prices. One important number, though, to watch out, of course, would be the Chinese non-ferrous metal output. That has increased by 8.5% month-on-month basis. So whether it's aluminum, copper, tin, nickel, all of those outputs have increased for the month of July, and that would continue to put pressure onto that sector today.
Okay, Manisha, thanks a lot for that. We have 3 minutes more to go before the opening rates kick in. For now, it looks like the Nifty is doing fine, up about 0.2%. The Sensex is up about 100 odd points. And in terms of individual stocks as well, you have the IT stocks once again that are rallying. So Wipro is up about 1 odd %. SBI is moving with some strength, and Tata Steel is still your big mover. Ashwini, what would your 9-10 call be? And also for a Tata Steel investor or trader, what should one do now?
See, if results are so great, then these stocks, why are they down 40–50%? Somewhere maybe the cycle is ending, so I am not interested in buying Tata Steel. It's trading below its 200-day moving average. So very weak stocks in terms of the entire metal sector. And EIL is a sell with a stop of 126, target of 114 as the 914 call. But watch out for the market at yesterday's highs. If it starts to find support, then, maybe there'll be a great short covering rally. So keep an eye on yesterday's high.
Okay, what's that number? Yesterday's high?
27,912 on the Bank Nifty and 11,406 on the Nifty. That's the two numbers we presented in the morning as well. For the two indices. So 27,864 is where we are opening, about 48 points shy of yesterday's high. On the Nifty, 11,381, high was 11,406. But I think Ashwini as a trader is perhaps referring to the futures numbers, so you'll have to make some bit of adjustments over there. Okay.
Sudarshan, anything on your radar now? Any bank you would trade?
No, I would not touch the banks at all. I'm pretty confused on the market since yesterday. There is no view, and the best trade then is to step aside. I know it's frustrating sometimes, but that's the best decision.
Okay, for people who've made money on Page Industries, Sudarshan, up until now, for long-term investors, there's fresh positive news, right? The MSCI India Index Edition. You think it makes sense to put more money to work here, or is the run done?
No, the run is not done. It makes sense to put more money, but not necessarily today. Not after, even Page will correct. But you keep it in your list and consider investing in it.
Actually, your thoughts? Your target was 32,000, I think, when we discussed this last. It's now at 33,680.
Well, keep holding Page and start wearing Calvin Klein. I think it'll keep rising higher. 38 to 40,000 is easily possible.
Okay. Well, that's some advice. Mitesh, how are you looking at the market at this point in time? Any specific stock? Any jewelry stock? Gold is at a 2018 low. You don't have to restrict yourself to jewelry stocks, but it was just a thought.
No, I'm not having a view on any jewelry stock, but for me, I think Mahindra & Mahindra and Axis Bank are two stocks which I would like to buy. That apart, I think Nifty, I think 11,400, I would want to attempt a short with a stop about 11,425.
Okay, so you guys are not convinced with the recovery. The rupee actually has shown a decent first 10-15 minutes of performance. It is continuing to remain well supported, 69.74 at this point. So the dollar is 20 paise cheaper. And therefore, at least there's no tumult coming, but it is not recovering all the way that it lost, or even half the way, or even a third of the way that it lost yesterday. Yesterday's loss was 1.4%. We are not anywhere near recovering that. Markets